So my name is David Klein, co-founder and CEO of a company called CommonBond. I think in order to understand what CommonBond is, it makes a lot of sense to go back in time to a little over 10 years ago when I graduated college. That really is where I think the story began. I ended up teaching English for a year in France. And it was in that year doing something off the beaten track that a seed had been planted in my own mind that I was going to go back to the States, work in corporate America for 5 to 10 years, pick up a lot of great skills, meet some incredible people along the way, and then go out and start my own thing. I come from a family of entrepreneurs that goes back to my great-grandfather in Eastern Europe, and so that was kind of the family business, so to speak. I was the black sheep in the family, having worked at places like McKinsey and American Express. No one had really worked at a company before. I thought it was going to be an important experience for me if I was going to go build a company or a series of companies that I thought were worth building. So it was in this time, in this 5 to 10 years, that I became fascinated by 2 things. One, I became fascinated by the power of education to prevent conflict. And 2, I became fascinated with this emerging group of socially minded companies like Tom Shoes and Warby Parker. I love the idea of values-driven business. I love the idea that you could have a profitable business model whereby the more profit you made, the more good you did. There was something beautiful to that. And so it was around this time that I said, okay, the company that I'm going to start will absolutely have a strong social mission. I knew that before I knew the problem I was going to solve. And so that had developed, and after about 8 to 9 years, I had decided to take the leap. I decided to leave corporate America and take the leap actually into business school and use that as an opportunity to incubate and accelerate an idea, build and start a company and run it before graduating. And so, long story short, that's what happened. And it happened because I went back to business school. And when I went back to business school, I discovered that it was very expensive. I knew it was going to be expensive. I didn't realize how expensive it was going to be. I knew I was going to take out loans. I didn't realize how expensive loans were going to be. I didn't realize how horrible and complex a process it would be to take out loans. And so it was through that experience that really a personal pain point through which I discovered that something had to change as it relates to student loans. Rates were too high, the process was unnecessarily complex, and nobody was really there to help you out. And so I decided to use that experience to take my background in consumer finance at American Express. I ended up meeting my co-founders at Wharton with complementary backgrounds as well, and we decided to build CommonBond. And CommonBond is, right now, a student lending platform committed to making the student lending experience better. And we do that through lower cost rates and a simpler, more human process. We're student loans now. We do expect to expand to other asset classes over time. We'd like to be one of the leading, if not the leading, values-driven financial services firm heading into the future. And just to take it back before I get to a few slides, just to take it back to the socially minded company, and using Tom Shoes and Warby Parker as 2 examples that have been huge inspirations to me. We're actually the first company in education and finance to bring the 1-for-1 model to bear. So for every degree fully funded on our platform, we fund the education of a student in need abroad for a full year. And we've partnered up with Pencils of Promise, which is an education nonprofit based here in New York, with over 200 schools around the globe in countries like Nicaragua, Guatemala, Laos, and Ghana. So that's CommonBond. What I'd like to do now is just share with you a few things about the company and how it really is the company I wished was around when I had to take out loans to go to school. So we just talked a little bit about this, what CommonBond is. This slide, I think, for me, captures the essence of CommonBond. So this is a group of 9 of our initial borrowers. As a way of story, we started from Wharton Business School, which is where I met my co-founders. We did a beta program. It was a $2.5 million loan program. We had about 40 students and graduates from the business school participate as borrowers. These are 9 of those 40. This is on the Wharton campus around a love statue. What I love about this is that it's so antithesis to what we think of when we think of financial services. When we think of financial services, we think of money, we think of commodity. We don't think about humanity, we don't think about community. And those are the 2 things that if we do things right at CommonBond, is how we'd like to disrupt financial services. So this slide I put out to describe the market. The market in student loans is quite large. It's $1.2 trillion. It's massive and expansive, which I think this image captures. We are focusing at first on grad school debt. We started with MBA degrees. We've since expanded to MBA, law, medical, and engineering. We would expect to expand to even more degree programs by the end of this year and more on top of that in 2015. This, again, is a little bit of how I think we're doing things differently. So at CommonBond, we do say that finance is all about community, not commodity. And here are a few examples of community events that we hold across the country, from Boston to San Francisco to Chicago to New York to parts of even Michigan. So we're across the country. We hold events for people inside the CommonBond community in order to create conditions for which folks in our community can come together and interact in meaningful ways that in some respect propel their personal or professional success. So the lending product we have does that by minimizing the expense line of someone's personal balance sheet. The community that we're developing and the opportunity we're creating for people to connect, we believe is maximizing people's individual top line. Just some momentum. We were fortunate enough to, well, I'll put it this way. We expect to lend out about $100 million by the end of this year. We expect that number to be $500 million next year and over $1 billion in year 3. We expect to have over 1,000 borrowers in our community by the end of this year and close to 20,000 in year 3 as well. We're fortunate in that we have a number of financial backers who have been doing this for a while and are really good at what they do. On the institutional side, we have 2 venture capital firms, Tribeca Venture Partners based here in New York and Social Plus Capital based in Silicon Valley. And then we have a few individuals whose counsel we seek and are fortunate for it. One is Vikram Pandit, who used to be CEO of Citigroup. The second is Tom Glosser, who used to run Thomson Reuters. And the third is Tom Kalaris, who used to be the head of private wealth at Barclays. One of the things that I'll say on this, and to the extent it's interesting to people, and one of the emerging trends that I see in finance in general, is this convergence of traditional finance with emerging finance. You have, I think, the financial crisis give birth to a divergent set of paths. The traditional path since the financial crisis has been one mired in regulation. Traditional finance has retrenched a lot from what I'll call Main Street finance. So you see a lot of banks pulling out of small business loans. You see a lot of banks pulling out of student loans. You see at the same time a number of emerging companies that have really come online and to market since 2007, 2008, but really accelerated in the last 2 to 3 years to basically cover and fill voids where traditional finance has left them. That's what we're doing in student loans. That's what, say, an on-debt capital is doing in small business. And then, of course, you have the lending clubs and Prospers of the world that you hear a lot about, and you'll hear more about as they start going public. Lending Club later this year, coming in and really thinking about personal and consumer finance and disrupting that in a few different ways. So I'll leave it there and look forward to any questions you may have. Thanks.